Diction-Carrie Volume I Edition 3, Closing Costs. So welcome to this month's edition of Diction-Carrie. This is my forum for simplifying terms that are otherwise confusing to the average consumer. Mortgage and real estate can sound so complicated. This month I thought I would try to demystify some of the closing costs. So tackling this closing costs description is always fun because it's not something that anybody really wants to talk about. Nobody wants to talk about costs, right? It's just an ishy term. Nobody likes to pay them. Nobody wants to talk about them. The fact is they're real. And I'm going to call this no free lunch because that is the reality of closing costs. They're real costs that cover fees that are incurred throughout the loan process, and they cover a variety of things, everything from loan origination charges, processing fees, credit report fees, appraisal fees, title company and government charges, among other things. But I'm going to use a couple of examples to help you understand the reality of them. They're not just made up fees, right? They are real costs. For example, an appraiser. So an appraiser has to go out and validate the value of the property, that the property is worth how much you're buying it for. They have to not only go to the property one time and take a couple of pictures, which is often what people think, but they need to go to the property, they need to schedule their appointment first, head out to the property, measure it, inspect it, go out, find 3 other properties, drive to those 3 properties, take pictures, at least 3, oftentimes today more. Then they have to go back and they have to evaluate, utilize software that costs money in order to prepare a report, which incidentally we as lenders require they do in a uniform way with specific software on specific forms, and then they compile all of this information. Quite frankly, might need to do additional research at the county or city, contact homeowners associations. It's not just a simple one and done out to the property. So they've got gas and mileage and real costs into software and their time. And let's face it, none of us work for free, right? We don't go to our jobs to not get paid. So they charge a reasonable fee for their time. That's a really easy one to explain, and many of the others aren't quite as cut and dry as that, as there are a number of different things that go and a number of different searches that go into the costs associated with processing or underwriting, etc. But the fact of the matter is nobody wants to pay costs, and they always exist. They're getting paid somewhere. One of the misnomers is that you can truly get a no-cost loan, and the reality is that's not true. If they're getting paid for somewhere, these are real fees, and they're getting paid either by the lender or by yourself, which lends to the next question. Who should pay for these costs? Who can pay for these costs? So it's always prudent to make sure that you're not being overcharged. We don't want that, but closing costs can be paid a number of different ways. They can be paid by a lender, they can be paid by you as the client, they can be negotiated to be paid by the seller. What's right for you needs to be based on your particular circumstances. Let's talk about that. What makes sense for you? Check out my blog for some other detailed information.